Welcome to another live Q&A with Oliver Velez. Of course, my name is Oliver Velez, and I always want you to know, and I never want you to forget, I am your trader for life. Yes, I'm your trader for life, traders, right here on this YouTube channel. Listen, I want you to know something. I want you to know that we spend an inordinate amount of time every single day making sure something gets uploaded to this channel that helps you take one additional step toward trading mastery. Yes, that is my promise to you. I have felt a responsibility for quite some time, guys, to leave behind a body of work that can serve as a foundation for anyone who wants to pick up this marvelous activity we call trading. Guys, listen to me. Listen to me carefully. Almost 42 years ago, I was bitten by the trading bug. 42 years ago. Many of you listening to me, you're not even 42 years yet. I'm talking about being bitten hard by this desire to be an independent, financially free trader. The bug bit me, fortunately enough, very early in my life. I was 14 years old. And I think I told this story before. I think I told it recently in one of, I think my last live, I told this, but very quickly, like I wanted to be free. I wanted to be independent. I never wanted to work for anybody. I never wanted to receive a check with someone else's name on it. That to me, something about that something about that didn't feel right to me. Like, why do I have somebody's name on my money? And I never wanted to rely on someone else. I never wanted, traders, listen to me carefully. I never wanted to have to please someone so that someone could give me a freaking raise or would not cut my pay, or I have to please this person, otherwise I get fired. Something about that just didn't mix with me very early on. And I wanted something that gave me the ability to be free. I got bit by the trading bug. And I will tell you, traders, that I've never, from the age of 14, when I got bit hard by the trading bug, nothing, I've never had another desire. Do you understand this? I've never had a plan B. I've never had another goal. I've never had another desire. Everyone says, Oliver, oh, can you give me your opinion on this? I can't give you my opinion on anything except trading. I'm a one-trick pony. I've never, from the age of 14, I've never gone down multiple paths. I did not have the luxury of having something to fall back on. I only did one freaking thing. Do you understand? One thing. That's it. From the age of 14. And I'm an old guy now. But I will tell you this. I got bit very hard at the age of 14, and my father helped me understand. My father helped me understand the power of what being financially free and aware could be, because my father really changed our lives. I think I told the story. At the age of 7, somehow, I was young, at the age of 7, I just got picked up out of one life and transplanted in another life, like literally overnight. It was crazy. And I was too young to understand, why are we moving to a different house? Why do we have these new cars? Why is my clothes different? Why is the state I live in different? Why is the school different? Why are my neighbors different? Why are my friends different? And my father changed our lives in this way by basically having one financial play. I think I told you the story. It was gold. He started accumulating gold in the 60s because a friend recommended that he do that, a friend, client, whatever. And gold hit huge in the 1970s. So when I got old enough to understand this and started questioning my dad about this, I was like, whoa, my dad did this with one financial play? One financial play? Our lives changed like this? I want to do this all the time. I was asking my dad, like, why did you just do it one time? Little did I realize my dad tried to duplicate it and kept losing. He got one lucky play, but you understand? I didn't want to be a one lucky play trader. I said, I'm going to do this. I'm going to do it all the time. I'm going to do it for the rest of my life, and I'm going to get it right. And from the age of 14, I've had nothing else but this. Now, I'm not saying that that's the path for you or anyone else. I'm not saying that. I have no right to say that. I don't know who you are. I'm just a guy on the internet talking right now. But I will tell you that that single-mindedness of purpose really helped me get through those formative years, which were not easy. All right? When the only thing you want to succeed at in life continues to evade you, when you are failing at the one thing on planet Earth that you want to do, it is not easy. It is depressing. It's disappointing. And I had to work through that. It wasn't easy. But I will tell you this, and guys, I'll get to your questions now. I will tell you this. It's not supposed to be easy. And it's not supposed to come right away. I was talking to my traders earlier about this. Nothing worthwhile in life comes right away. Nothing in life worthwhile comes quickly. And nothing worthwhile is easy. If it was easy, it wouldn't have the value attached to it. If it came quickly, you wouldn't really want to do it. You want to do this because it's hard. You want to excel at this because the vast majority of people on earth can't do it properly. You want it to be difficult. You want it to be hard. You want it to require time. This is proof of work, not proof of stake. You want your success as a trader to be evidence to the world that you sacrificed, that you put the work in, that you put the time in. You don't want your success to be like, oh, you're just successful because of your last name. You're just successful because your father's rich. You're just successful because of your color. You're just successful because of the school your parents put you in. No, you want your success to be evidence to the entire world, proof to the entire world that I worked for this. I sacrificed for this. I toiled for this. That's proof of work, not proof of stake. All right, guys, that's it. You know, guys, I always start these Q&A sessions like with a small little monologue. And I promise you, I never know what I'm going to spring into. It's all spontaneous right off the bat. So anyway, just felt like talking to you like that. All right, guys, talk to me. What questions do you have today? All right. I just threw a suggestion out there about what we talk about, which is what was the name? What was the name of the thing today? I forget what the name of our theme was today, but crises. That's right. We are in the throes of a crisis. It's not marketed that way. It's not communicated that way, but oh my God, we are in the midst of a very, very, very delicate and potentially very dangerous crisis. And it's very necessary for us to protect ourselves from this, to position ourselves correctly in the midst of this crisis. You see, there are two main demons or devils that are the enemy of any functioning society. Inflation. Oh my God, inflation destroys lives. Do you understand this? If inflation gets to a certain level, people die. Straight and period. No time in the history of the human race has there ever been major progress and flourishing during inflationary times. No, historically during inflationary times, people die. Do you understand this? They die. And those who don't die have a terrible go at it. Inflation is a monster you do not want. You do not want to totally let this thing out of its cage. Do you understand? Because when it does, it destroys everything. Inflation is theft. It is the theft of your time. And time is the stuff that your life is made up of. You do not want the demon of inflation completely free. The other demon you don't want is depression. You do not want the economy that the human race depends on. You do not want that to slip into recession and ultimately wind up in depression. Because in depression eras, people die. Inflationary errors, people die. In depression, people die. So you're trapped between these two things. Now get this. This is why there's a crisis, guys. US Fed is raising rates. The UK is raising rates. European Union Bank raising rates to try to combat the inflation monster, which they created, by the way, right? By printing so much money. So you created the monster. Now you're trying to combat the monster you created by raising rates. But every time you raise rates, you move everything to recession because the economy is weak. So normally when you raise rates, traders, please understand that when normally throughout history, when central banks have raised rates, they're raising rates into a hot economy. They're raising rates into a runaway economy. But no, this economy is weak, but they feel like they've got to raise rates in a weak economy. So there's the inflation monster that you try to combat by raising rates, but every time you raise rates, you move the economy down into recession. You raise rates again, deeper into recession. And if you keep going, you end up in depression, which you end up right in the hands of the other monster. So you're trapped between two monsters. You can't, I'm telling you, rates can't keep going up. First of all, it'll bankrupt every country in the world, including America. All right? So you only got so far to raise, and you're getting closer and closer to the other monster every time you raise. So there's this delicate balancing act, and this is the crisis. My traders are going to be prepared. They know what to do in this crisis. So that's where we are. Let me take some of your questions here, guys. Here's a good question by Andres Jimenez. Dear boss, how is the crisis going to impact day trading? Here's the beautiful thing. Day trading is easier in a crisis. How amazing is that? Trading gets easy in a crisis. Listen, the easiest market in the world to trade is a bear market. You just wake up in the morning, you press the sell button, and you drink coffee. And when you finish your coffee, you buy back at a lower price, and that's your day. It's literally, I'm being somewhat facetious, but it's almost as easy as that. Listen, stocks go down faster and harder than they go up. This is why I have always, throughout my entire career, I've been a natural short seller. Like, you have to drag me to the long side, kicking and screaming. My traders will tell you this. 9 times out of every 10 trades is a short, even in a bull market. So imagine a bear market. In a bear market, it's like I'm like a freaking kid in a candy store. Do you understand? It's like, oh my God, Which candy do I choose? It's so easy and fast and quick in a crisis, in a bear market. So traders thrive in negative market environments more than they do actually. Investors thrive more in a bullish environment, and traders thrive more in a negative market environment. And what a beautiful thing if you're both. This is what I train my traders to be, both. You know, there are certain things that you don't choose between, like, should I be a good man or a good father? No, dumb, you should be both. Like, you don't choose between that, right? Should I be a day trader or should I be an investor? No, dumb, you should be both. You don't choose between those two things. All right? Trading is income producing. Core trading or wealth-oriented trading is building wealth. You need income and wealth. You need excess income beyond what you need to live a good life should go into wealth creation. You understand? So we day trade, we trade short-term oriented to take care of our lives, but a good life, not just surviving. I'm not talking about surviving. I'm talking about steak and eggs. You know what I'm saying? I'm talking about the steak life. I'm sorry if you're not a meat eater, but I'm talking about steak and eggs, not rice and beans. I'm talking about a good life. Now, anything beyond that, you take the excess and you put it into a wealth creating item. You understand? And you combine the two. You don't choose between them. This is dumb. You play them both. All right. Dyron is asking, do you use the 1 minute or 5 minute? Oh, if you use the 1 minute or 5 minute, do the concepts I teach you work? The concepts work in every single time frame. I've said this over and over and over again. Every trading technique or tactic that I teach you is applicable in every single time frame. I don't pick one. 1 minute, 30 seconds, tick chart, 5 minute chart, 2 minute chart, hourly chart, 30-minute chart, daily chart, weekly chart, monthly chart. Doesn't matter. Every time frame. And also every market. And the reason is because the tactics that I teach you are rooted in the psychology of market participants. And the psychology of market participants is driven by two dominant emotions, right? Fear and greed. Fear and greed doesn't just disappear because you change a time frame. Oh, wait a minute. I'm trading the 2 minute. Let me switch to the 5 minute where fear and greed doesn't exist. No, it exists there too. And just because you switch from one market to the other doesn't remove fear and greed. Fear and greed is in every market. Fear and greed is in every time frame. And all my tactics do, guys, is teach you how to identify when does fear, boom, 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 stop, and greed begin. There's a moment where fear stops and passes the baton to greed, and greed starts running. And then greed runs its race, and then there's a moment where greed gets tired, I'm tired, and passes the baton back to fear. And fear takes the baton and runs its race. All my tactics are designed to do is to teach you how to identify when are both fear and greed, when do both of them have the baton? Do you understand this? There's a moment where fear and greed both have the baton. That split moment of transition. Tell me you understand this. There's a moment where fear stops and greed takes off, but there's a moment where the baton is in the hand of fear and greed takes the baton. There's a moment where both, it's ever so brief, have the baton. Boom! I teach you how to identify those moments. Do you understand? And those moments exist in every time frame and in every market. All right, cool. All right. Let's see here. Someone's asking me, do the narrow and wide concept, the concept of a market being in a narrow state or a wide state, is that in the Indian market? Listen, I'm going to say it again. My concepts work in every time frame and every market on planet Earth. I don't know about markets in another galaxy or on another planet. All right. We have yet to do intergalactic travel, right? I haven't done that yet. So what I'm telling you is that if it's a market on planet Earth, it works in that market. All right. Period. Indian market, Chinese market, American market, German market, UK market, every market. That's like saying, do Indians inhale and exhale too? Because that's all you're talking about when you're talking about a narrow state and wide state. The market is inhaling and exhaling. It inhales, it goes low volatility to wide volatility, low volatility to wide volatility. Every mechanism in life has these two states, right? The market is no different. Now, I think it's important to understand this, that people confuse the fact that they confuse this fact very often. They think a market has a life of its own. No market has a life of its own. The market is only a reflection of the lives of its participants. Like, for instance, if no human being showed up, would the market move? No. Do you understand what I'm saying? Or if no human being showed up, or no machine that a human being created was turned on, the markets wouldn't move. Do you understand this? So the market doesn't have a life of its own, which means that its life or movement is really driven by the activity of its participants. And the activity of its participants is driven by two dominant emotions, fear and greed. So at the end of the day, you're not trading the market, you're trading people. And more specifically, you're trading the interchangeability between fear and greed. That's all you're trading. You're not trading company earnings, you're not trading companies' products, you're trading fear and greed, which have nothing to do with that nonsense. All right. Let's see what else you're doing here, guys. Let's see. Diego Garcia says, Oliver, I'm one of your students. Nice. Welcome to the family, guys. How can I control my losses as a beginner so I don't give up? Any advice? How can you control your losses? By controlling your losses. Like, I don't know what to say. Like, look, you have to be a man or woman of your word. You have to learn how to become that. A man or woman of your word. Being disciplined is nothing more than doing what you say you're going to do. And so when you ask me, how do I control my losses? It almost makes me feel like you don't know how to control yourself, because losses don't happen out of thin air. You create losses. So to have controllable losses, you must decide to have controllable losses. For instance, I will not lose more than $70 on any trade. Boom. Now, if you can keep that word, your losses are controllable. I'm giving you an example. All right. Every trader needs a maximum loss per trade. That's rule number one. The first thing before you place your first trade in your life, you should not place that trade unless you are clear what your maximum loss per trade is. What is that? That maximum loss per trade is your word. That's your promise to yourself. That's your promise to your freaking God, whichever God you worship. And if you can't keep your own promises, how can you keep your promises to anybody else? Like your wife, your kids, your personal God, your society, your community, your church. How can you keep, if you can't keep your own promise, you can't keep anyone else's promises. You can't keep promises to anyone else. And this is why I'm always telling you that trading is a microcosmic version of life. It teaches you how to be a better human being, because first and foremost, you must become a man or woman of your word. And you start off with this is the law, maximum loss per trade. Listen, the markets are lawless. Which means that you must bring the law to the market. The markets doesn't have a law. The market doesn't have limits. You bring limits. The market doesn't have parameters. You bring parameters. The market doesn't have order. You bring order. The mistake that people are making is that they are looking for order in the markets. It doesn't exist. The order comes from you. They're looking for some laws that work in the market. No, you bring the law. The market is lawless. The market is orderless. It doesn't have order. It doesn't have law. It doesn't have a cutoff point. It doesn't have a quit moment. You have to bring the moment to quit. You have to bring the rules to the game. The market doesn't have rules. So now you have to know how to make those rules properly. And then you have to be man enough or woman enough to do the rules, to follow your own rules. And once again, if you can't follow the rules you make for yourself, how are you going to follow any rules? If you can't keep the word to yourself, your own word, if you can't honor yourself, then how can you honor anything? It all starts with you, right? And so how do you control your losses? By controlling your losses. Keep your word. Pick a number, $70, $60, $100, whatever it is, and keep that word, and your losses are controlled. This is the first act of proper trading. To establish a maximum loss amount and to practice never going 1 penny beyond that maximum loss. And it's called maximum for a reason, which means that the vast majority of your losses should be smaller. You should not be losing maximum every trade, right? It's called maximum because it should not be normal. You should normally be losing less than your maximum. Do you use program trading? All right, this is another frequently asked question. I've mentioned a million times, but I'll do it 1,000,001 times. No problem with me. All right, I used to have 14 programmable algorithms that I did this in 2002, 2003. All right, and we had 14 programmable algorithms that were really trading between the pennies. All right. It was right after the decimalization of the market. You see, prior to the decimalization of the market, markets traded in fractions. But then they went to the decimal system, right? After the decimalization of the market, we began trading between the pennies. But I mean millions of times. And A human could not trade as quickly as that. So we programmed algorithms to do this. And I had 14 different algorithms that ran without any human intervention. It took a lot of work. It took a lot of tweaking. It took a lot of programming. But eventually I let that go just because the market kept getting more and more efficient, and finding the inefficiencies just got, the space just got too crowded. All right. So that was my period of about 6-7 years or so of algorithmic trading in the markets between the pennies. All right. So we were doing over 1 billion shares a month. All right. So yes, I used to. It's a crowded space though, by the way, guys. When something's crowded, when it starts being marketed to you. Have you seen these marketing campaigns? Trading bot for sale. Really? Have you seen that? Trading algorithm for sale, trading bot for sale, trading signals. Guys, let me tell you something. If something produced millions of dollars, it would not be offered to you. Do you understand this? You do understand this, right? You're smart. You're smart. My followers are smart. You're smart enough to know this, right? I just hope you're not falling for that nonsense. Trading bot for sale. Yeah, right. Hope you know this, right? That's when you know the space is crowded. When I was doing it, you couldn't get a trading bot. All right. All right. Okay. Oh, good question. Martio Morrison. Oliver, would you have liked to have paper trading available to you when you first started? Because I didn't. There was no demo or practice account. You jumped right in, because remember, guys, when I first started trading, there was no self-directed trading. You had to call. So you had to call the trading desk, and licensed order takers were the only people who could place a trade. Traders could not place a trade. And if you became a licensed order taker, you could not trade. So there wasn't like you can trade and be a licensed order taker. No, you were either a trader or you decided to become a licensed order taker. You could not do the both. It was a conflict of interest. All right. So traders could not be licensed, and traders could not place trades. Only licensed individuals could place a trade. So you called a licensed order taker. Do you understand? So now how do you practice that? There's no way to practice that. You pick up the phone and say, listen, buy me 1,000 shares of Intel. Wait a minute. Don't buy me 1,000 shares of Intel. I am practicing. Boom. There's no way to practice that. Right? So, you did have paper trading where you could just pretend that you made the call and mark it on the chart. You understand? I would buy here. I would tell them to sell there. And that has its place. It does have its place. But that form, guys, of paper trading has its place only if it's physical. Listen to me carefully. I tell my traders this. You need to physically write. You do not paper trade in your head. You lose all the effectiveness. You literally have to pick up a pen and write in real time. I entered Intel at this price, 200 shares. Boom. You write it. I place my stop at this price. Boom, you write it. I am adding 100 shares because of this at this price. You write it out. You understand? It's the physical act of writing on paper that makes it more real than doing it in your head. So if you do this paper-oriented trading, make it real by literally writing out your trade. This will also keep you conscious throughout the trade, because if you're writing something stupid, you've just caught yourself. Like, why am I doing that? It helps keep you conscious. You're less conscious when you're trying to do it in your mind. No mind. The mind is a terrible thing. No mind. Frank Contreras, I think. Frank is asking, Oliver, how can I take trades at the beginning of a trend if I cannot be guided by the direction of the moving averages like the 20? What should be my guide? Well, you should know signs. There's a small handful of events that have the propensity to kick off a trend. One of those is what my traders know as a clearing elephant bar. So many trends start off with a clearing elephant bar. That's one. There are a variety of things that often ignite a brand new trend. You have to learn what those things are. And so when, let's say there's 4 things that typically ignite a brand new trend, these 4 things become 4 actionable events. These 4 things that ignite new trends, you should know statistics for. For instance, this has a 68% chance of igniting a new trend. This has a 72% chance of igniting a new trend. This has a 40-something% chance of igniting a new trend, and so forth and so on. And so when you know when you have these events and know the probability of those events, you can structure your trading plan more appropriately. Okay, the 72% chance I play heavy, the 40% chance I play lighter. All right, every trading plan should have size elements too. So every tactic, you assign a size to it. You don't make the size decision at the heat of the moment. It's the size decision is already built into your plan. So this event, I do 2 lots. This event, I always do 1 lot. This event is a 5 lotter. The odds are high and the risk is low. 5 lots. So you see what I'm saying? 2 lots, 1 lot, 5 lots. Every tactic, every technique should have a size associated with it. So you're not making decisions when the market is on. You are matching. All right. So when A happens, I do the action associated with A, and I've already know the size. The size is built into the plan, so that now there's very little thinking. Your enemy is your thoughts. Your thoughts are your enemy in trading. A master trader does not think. A master trader does. Do you understand? There's no thinking. There's no analyzing. The analyzing has already happened. The thinking has already happened. The plan is now set. You just follow the plan. There is no need to think in proper trading. And almost all of you are thinking. That's the problem. Think of it like this, no pun intended. You have worked all of your life. You have worked all of your life for this savings that you have. And you go to a money manager who claims to be able, I'm going to grow this for you. And you ask a simple question. Can you make this amount more? And the person says, the expert says, I think I can. I think I can trade your money. Well, I think. Now, if that's not acceptable to you, right? Why are you thinking with your money? I think it's going to go up. I think this is a good trade. You should not be thinking. You should be doing because you know. There is no thinking when you know, traders. What is your name? Wait a minute, let me think. There is no thinking when you know. Is that your wife? If you think, you die. Do you understand? Yes, of course. You don't say, well, she was my wife when we left the house today. She was my wife along the car ride here today. I think she's still my wife. No, when you know, there's no thinking. So if you're thinking in a trade, what does it mean? You don't know. And should you be risking money when you don't know? No. We only trade when we know. And when we know, there is no thinking. Thinking is overrated. Your plan replaces your thinking. Do you understand this? Tell me you understand this. I want to see a few comments. Oliver, I understand. I understand. Tell me, your plan is the replacement for you thinking. That's the whole purpose of a plan. Now you don't have to think anymore. Do you understand this? I want to see. I don't see any comments. I don't see any comments. All right, good. Thank you, Till. Till's the first one. Good. Gaps are very volatile. Yes, thank God they're volatile. Love volatility. We need volatility. Guys, you don't want a lack of volatility. This is a misnomer. You don't want, volatility gets a bad name. Thinking should have a bad name, but it gets a good name. Volatility should have a good name, it gets a bad name. Life is just confused. Do you understand this? Volatility is what makes you money. If it's not volatile, it's freaking, you know what's not volatile? A dead person's not volatile. That's what's not volatile. All right? You want non-volatility, you want death. We need volatility. Volatility is welcome. We have to harness it properly, of course. But it is a tool. It's not dangerous. It's as dangerous, volatility is as dangerous as a hammer. It just sits there. The hammer doesn't do anything. You're dangerous with the hammer, maybe. Volatility is not dangerous, but maybe it's dangerous for you because you don't know what you're doing with volatility. But we need volatility. Thank God gaps are volatile. I love them. If it's not volatile, that's right, Bill. If it's not volatile, it's freaking dead. All right? A dead person is not volatile. A corpse is not volatile. We don't want that. We want movement. We need movement. We need volatility. All right. Alfred says, follow the written plan religiously. A safe bet always. Yes, if the plan is a proper one. God help you if you put together a very poor plan. And now it's like the blind leading the blind, right? So assuming that the plan is a sound one, yes, the plan should be the trader. You stop being the trader and the plan becomes the trader. Question, if we are not using actual stops and a fast, large candle blows through where we should be out, how do I get out at my max? You should be getting out before your max, shouldn't you? You don't have, guys, look, let's say your maximum loss per trade is $70. You don't wait for 70. What are you doing? You don't wait for 70 to get out. You got to start getting out like at 62. You understand? The idea is 70 is max. So you have to account for slippage. You have to account for your timing being off a little bit. You don't wait for 70 and then try to get out. Who does that? That doesn't even make sense. Then how is 70 your max if you wait for 70? Then 70 is not your max, right? Something bigger is your max. So if 70 is your max, you should be getting out at 60, 61, 62 to make sure that you don't go past 70, right? You guys are hilarious. I love it though. I love it. Hello, I hear a lot that due to economic crises, it is not a good time to be a trader. What? Where'd you hear that from? As I told you, bear markets are the best trading periods. You wake up and you sell. Anything up, you sell. Anything down, you sell. It's literally that easy in a downward market, in a crisis-driven market. It's a great time to be a trader. I can't really think of a time that it's not good to be a trader. I can think of probably a no volatility market. Speaking of volatility, the market's dead. That's a tough market. Market's not moving. No movement, dead, zero volatility. Very difficult to trade. OB is the GOAT. Thank you, Veronica. I appreciate that. All right, Namgay says, boss, for me, I follow the plan until the market kicks me in the teeth. Then I get hijacked and my plan goes out of the window. I'm still a novice trader. Yeah. So I've spoken about this at length before. Many people they tinker with their trading plan too frequently, right? So the magic number for my traders is 20. So they do 20 trades, right? They get 20 trades under their belt and then they assess. Now, that assessment might lead them to a little tweak of the plan. Maybe, maybe not. But they're not tinkering with the plan or questioning the plan every 2 trades, every trade, every 2 trades, every 3 trades. No. They have to get a block of 20. You have to do the same thing the same way every single time for 20 times, irrespective of the results. You need an appropriate data set to make an analysis. You don't have enough data with 4 trades. And I see a lot of traders out there making this error. They change their plan every trade. You've got to do something consistently, the same way, the same time, without deviation, at least 20 times. Then you have enough data to start with what's my biggest loss and why. Is the data set of 20 trades, is the 20 trades profitable? What's my biggest win? What's my biggest loss? What's my average loss of the losers? Is that number too big? All of these things you delve into. And you do this 20 trades by 20 trades by 20 trades by 20 trades. In fact, every step along the way in your journey is made up of 20 trades. So you don't make another step toward your journey, toward your goal, until you've just completed 20 trades. And if you think of it that way, I think you'll progress better. I have to get to the next 20 trades. I have to get to the next 20 trades. We grow 20 trades at a time. We get better 20 trades at a time. We correct 20 trades at a time. We tighten up, perfect 20 trades at a time. Not every trade. That's chaotic. All right. Oliver, what videos you have created should I watch to learn these things? All of them. Watch all of them. All of them. Yeah. Oliver, why? I like that. I like that. Oliver, why? That's the best question. Why? Why what? All right. All right. What? Okay. Ark is saying, Oliver, what happens if I do 20 trades perfectly, but there's no gain of money? Your goal is not money. Guys, how many times have I told you this? Stop trying to make money. It is the market's responsibility to make money. It is your responsibility to lose correctly. The market can't lose correctly, so it needs your help. But it doesn't need your help to go up, as an example. If you buy and the stock goes up, what did you do except pray? You didn't push it up, did you? You didn't throw billions of dollars at the stock to get it up, did you? No. You don't do anything to make money. But the market can't stop itself. Only you can. So you can't push a stock up. And the market can't stop itself. So there's a partnership here, right? The market says, look, I got the money side. It's almost as if, think of it this way, guys. You guys are our partner, you and the stock. And the stock says, and you choose the stock to be your partner. There's a lot of potential partners, and you choose this one. Let's say WXYZ. And WXYZ said, thank God I got chosen. Yes. All right, boss. Okay, I'm ready to go out there. I'm going to go out there and I'm going to make you money. But listen, just in case, this is your stock talking to you, right? Just in case it's a little too tough today. Just in case I just don't get it right. Will you save me? I need you to promise me, please save me. I can't save myself. I will go out there and try my best to make money, but if I can't, just save me. Don't let me die. And that's what proper trading is. You have the loss side. The stock has the win side. And you should stay out of the way, because when you start trying to make money, you're playing the wrong side. It's not your job to make money. Guys, you can throw a dart at a list of stocks and it has a potential to go up. You just throw a dart like this. Close your eyes and throw a dart at a list of stocks. Boom. And just buy that one. And you got a 50-50 chance of it going up. You understand? Just by math, you're going to get things that work. But math does not create consistently small, controllable losses. You have to intervene. So traders who are having a difficult time, they often spend their time trying to do the market's job to make money, when all you have to do is eliminate the ones that don't. All right, pick something, and if it drops to a certain amount, kill it. Pick something else. If it drops to a certain amount, kill it. Pick something else. If it goes up, let it go up. Pick something else. If it drops a certain amount, eliminate. You're the freaking eliminator. You understand? If it goes up, stay out of the way for the most part. And if it drops to a certain amount, eliminate. Drops to a certain. If you do this 10 times, just randomly pick a stock and just say, okay, when it goes negative $50, I kill it. All right, pick another one. Boom. Negative $50, I kill it. Pick another one. Boom. Negative $50, I kill it. Some of them are not going to be negative. Some of them are going to go up. 300, 200, 100, 50. 60, but every one you just kill at 50. The ones that go down to 50, you kill. Just by math, you don't even have to be skillful. Just by basic math, half of them probably going to go up. Do you understand? Now, what if you took that strategy, right? I just randomly jump into something. And if it goes down 50, I kill it. Now, if you add another layer to this and say, once it goes up 50, I now will kill it at 0. So first, I kill it at negative 50, kill, negative 50, kill, up 50, my stop is now 0, break even. Now I kill it at 0. And if it goes, and if you add another, if it goes up 100, now I kill it at plus 50. Now, if you just add that, buy a stock, drop 50, kill it. Buy a stock, drop 50, kill it. Buy a stock, up 50, 0, up 150, and then let this go and start again. If you just did that over and over and over, do you know that it's impossible to lose? Over time, you can't lose. Why? Why is it impossible to lose with that? It's impossible over time to lose with that because you're limiting your losses. Success is on the loss side, traders. It is not on the win side. The win side takes care of itself. You lose because you are spending your time on the win side, which is not your side. You win by controlling your losses. And the wins are like the sun. The winds shine on you whether you are just or not. The sun shines on the just and the unjust. It makes no distinction. Winds shine on the untalented traders and the talented traders. None of you can tell me that you've never had a winning trade. None of you. Every single one of you's had a winning trade. Every single one. So what does that tell you? That winners just happen. But you can't. Consistently small controllable losses can't just happen. So you actually have the most important part of the game to ensure that every loss is controllable. That is your magnificent obsession, or should be. And then you let the chips fall where they may. You understand this, guys? Tell me you understand what I just explained to you. Why are my nails so glossy? Like myself, porque sí? Porque sí? Because they are. You guys are so hilarious. I love it. Porque sí? Fibonacci in your operational, does Fibonacci work? Yeah, I mean, Fibonacci has relevance, absolutely. I just don't think that the very intricacies of Fibonacci are really needed. Just your basic levels, you know? So I teach concepts that are based on Fibonacci that I don't really announce as Fibonacci. So for instance, we use the 8-period moving average for something. My traders know this. My traders know we take trading profits on 3 pushes, Fibonacci number. 8-period moving average is valid for a certain type of market environment. That's a Fibonacci number. 13 as well. All right. 20-period moving average is really the 21, but a lot of people remember it better as the 20. So it's not that great of a difference, but the true moving average is a 21. All right, 33% retracement, 50% retracement, more or less, but 33, 66. These are basic elements of the Fibonacci concept, which is a universal truth. All right. So yes, Fibonacci has some validity. All right, Oliver, can you explain the mechanics of adding to a winning play? Doesn't adding when you're in profit raises your average cost and lowers your profit? How can it lower your profit? No. Okay. Let's clear this up. The first thing I will say is that if you don't add, if you do not become a trader who adds to an existing play, you will never, ever. My mother used to say, Oliver, never say never. Mom, I'm saying never. Sorry. Never will you become a big trader. Every big trader in the world adds. Everyone. You can't become a big successful trader without becoming an adder. Do you understand this? Adding is crucial. The reason that you add is, in most cases, your ad is a confirmation that you are right. So the way you have to look at it is your full position is never put on at first. You are testing the trade with a partial position. And once the trade confirms that you're right, you add to make it a complete position so that you lose on partial positions and you add on positions that are working for you. That's the way you look at it. So it's not like you're adding on top of a full position. You never put on a full position initially. All right. Now, the other thing I will say about adding is this. How many of you have experienced taking profits too early? Type the number 1. I want to see this. If this has happened to you, you snatch at profits early and the profit goes on and you wind up kicking yourself for getting out too soon. Type the number 1 if that has been an experience of yours. Type the number 1. Right? Do that for me. I want to see. Has that been an experience for you? Where you snatch at the profit real fast, you take it, and it's a profit, but then it goes on. Yes? Okay. So, if this is a common experience, instead of taking the profit, what should you do there? Add to it. You're telling me now that I take profits too early and they keep going. So shouldn't you reverse that? Instead of taking, you should add? I mean, isn't that basic freaking math? Isn't that basic common sense? You add to your winning plays, period. Otherwise, you will never, Mom, I'm sorry, you will never, do you understand? You will never be a big trader. Every big trader adds. Right? Superpower says, but I fear. What if it turns against me? I'm scared. I'm scared, Oliver. I fear. Got a man up here. What is this? I'm scared. Look, you have to realize that only you can hurt yourself. You are the danger, not the market, not the stock, you. There will never be something uglier than you. Do you understand? No stock, no market, no anything. You are the problem. You are your worst enemy. And so the first step toward conquering fear is to frickin' control yourself. Now, I can't make you control yourself, but you have to man up or woman up and write a number on a piece of paper, $70, $50, $100, whatever that maximum loss is. Write that down, stick that number somewhere on your frickin' computer screen, on your keyboard. Let that number stare at you. Do you understand? And start practicing being a man or woman of your word and saying, I will never let a stock go beyond that number on that sticky right there. Just start practicing that. And then there's nothing to fear. Does $60 scare you? Really? No, that can't scare you. Right? And you'll discover that you're really not scared of anything except you're scared that you won't do the right thing. You're not scared of the stock. You're not scared of the trade. You're scared of yourself. You're scared that when it comes time to do the right thing, you're gonna fail. And so you have to practice doing the right thing in the face of that action every single time until that fear disappears. All right? Can't be afraid of $60, $70, or whatever the number is. All right? Alejo, what do I recommend for money management? You have to be a little bit more specific with your question. I don't know what you mean by that. All right, that's very, very broad. Money management is a very broad topic, so you have to be more specific for me. Ocean Wave, are most of your trades scalps or are they bigger trend following trades? I would say today, most of my trades run the scalp gamut. Now, I'll tell you why that is. Because I have responsibility to train you during the live market. And so I sacrifice a lot of bigger, longer plays because you will get ignored. So I am always with traders in every live session. And so I'm trading and teaching at the same time, showing, instructing at the same time, explaining what I'm doing at the same time. And so I will take a $3,000 or $4,000 gain, boom, when that potentially could turn to be a $7,000 or $8,000 gain. But I'll take that suffice, and boom, start focusing on my traders. All right. And so what I've done in recent years is more adopted a get in and quick, explain what I've done, focus on my traders, and put more emphasis on my wealth plays. So I trade with less than 5% of my capital, way less than 5%, like 2% of my capital. And the rest is in wealth generating activities. But that is not what you should start with. You don't start scalping. And scalping, just so that we're clear, scalping is one move out. So you're in, one move out. That's a scalp. But I teach my traders that you want 3 moves before you profit take, right? So if you start off taking one move, if you start your career becoming a one move trader, you can never, if that gets too deep in your DNA, you will never be able to go to being a big trader. It doesn't work backward. It doesn't work forward like that. You have to start being a bigger trader, which automatically makes you a good scalper. So if I teach you to take a 3 movement play, If I teach you to be good at taking 3 movement plays, not just enter 1 movement, but you wait for 3 movements, and you get good at that. So now you're regularly grabbing a 3 move play, regularly. And then I say, well, now I want you to take 1 move plays. You think you got to practice that? No, if you're good at taking 3, you're automatically good at taking 1. All right? But if you're 1, you're not automatically good at taking 3. So you always start with the bigger, you start learning to grab the bigger moves, which automatically will make you an expert taking the smaller moves. I've seen so many traders come into this space over the years, and they start off scalping. And they might even have a good multiple year period, but they all die at the end of the day. They all leave. The market breaks them because they're not able to go beyond scalping. And every market environment is not a scalping market environment. And any bad period takes a scalper out because the gains are smaller. All right, so you don't want to focus especially in the beginning of your development, you don't want to focus on being a scalper. That's not where you start. Oliver, I improved my trading a lot from your videos. I'm a trader from India. Please is it sufficient to watch all your videos, digest, and become a successful trader, or it requires your training program? All right, tricky question. Look, let's just be realistic, okay? You cannot learn how to trade from YouTube. Let's just cut right to the chase, all right? You just can't. All right, you can't just watch videos and think you're going to become a successful trader. Not even mine. I'm sorry. You cannot read your way to becoming a successful trader. You can't freaking go on Amazon and buy trading books, and at the end of the books, you're a trader. No. You can't watch 12-minute videos, and at the end of all the videos, you're a good trader. No. Let's be realistic, right? I'm not saying that those things don't have a place, traders. They all have a place. Books, videos, courses. But you can't buy yourself success here. You have to trade. Think about this. You have to trade. The only way to do this is to trade. And get this, you have to lose. This is where my program comes in. You have to lose to win. You have to go through loss first. That's the first thing you go through. That's the first door. That's your first challenge. That's what kills 85% of the people who try this, because they're expecting to win first, when in fact, your first experiences are all losses. You have to lose. It's necessary. This is the way life is. You have to suck first. You suck at everything first in life. But somehow we understand this when it comes to picking up a basketball for the first time in your life. You suck. Kicking around a soccer ball for the first time, you suck. You're supposed to. It doesn't work the opposite way. It's not like you start off good and then you suck later. You suck at everything you start off with first. You're supposed to. You lose your life to gain your life. This is just the way the universe works. But somehow when it comes to trading, you guys think that it's an exception. I don't understand this. You understand that it takes time to become a good doctor. It takes time to become a great basketball player. You understand this, but when it comes to trading, you don't want it to take time. Like, it just doesn't make sense to me, and it frustrates me, and it's very disrespectful, to be honest with you, right? It's disrespectful when you think that you're supposed to come in here, open up an account and instantly be good when I have gone through depression. I have put my time in. I have worked. I've sacrificed things I did without year after year after year. I earned this. And you think that just because you open up a freaking TD Ameritrade account, that you have a right to start winning. Doesn't work that way. So look, you can't buy a course and think the course is going to make you a trader. Not even mine. It's not going to do that. It can help. It can serve as a foundational starting point. But that's not how you learn. You learn by trading and losing. Now, where does my program come in? A program like mine will shorten that journey. Why? Because there are many, many dead ends. You will not go down any dead ends. You will be guided. A guideless, instead of you being out at sea with no map, you'll have a map. You'll be guided. You'll be critiqued. You'll be evaluated. You'll be taught. You'll be trained every single day, and you'll be given the capital. So, can you do it without that? Well, theoretically, yes. But it's a much longer route without guidance. It is a much longer journey without someone there who's been there and done that. It's longer, it's harder, and it's far more expensive. If you think education and training is expensive, try ignorance. In this game, you think my program is expensive? Oh my God, try ignorance at the game of trading and you'll see what's expensive. All right? All right. Guys, you got to trade. You have to spend your life inside of trades. Please understand this. There's no other way. I've always explained it like this. You have a progress clock, right? And so you want that clock to keep ticking because the longer that clock ticks, the more progress you're making. Tick, 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 tick. The moment it only ticks when you're in a trade. You enter a trade, tick, 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 tick. You exit, there's no ticking. You're looking at charts, no ticking. You're reading a book, no ticking. You're watching a YouTube video, no ticking. All right? You're in a course studying, no ticking. Your clock starts ticking again the moment you enter a trade. You're in the trade, tick, 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 tick. You get rid of the trade, you end the trade, your clock does not tick until the next trade. I don't care how many hours you study. I don't care how many charts you mark up. I don't care how many courses you buy, how many programs you enter, how many books you read. There is no ticking unless you're in a trade. So if you can only make progress by trading, what do you think you should do a lot of? Trade. Now, you can do a lot of it wrong, and that doesn't help either. That's where guidance and training comes in. That's what it prevents you from doing, from wasting your freaking time. Going down this dead end, there's a lot of dead ends in this business. There's a lot of dead ends. You could do something for 3 years and find out, shoot, all of that was wrong. And you just wasted 3 years doing the wrong thing, building the wrong habits, right? And there's no time for that. There's no time for that. So you can't buy success, but you can buy time in a way. In this sense, you can curtail what it takes to get there by having the right tools, by having the right amount of money, and by having the right guidance. All right? All right, Chris says, I do have a right to start winning because I've been through and learned from through the losses. Good. Went through the loss stage. Went through the understanding management stage. The importance of risk management. Good. Good. So, but what lets you know that the learning is over? The development is over. There's only one thing. It's consistency. If you're not achieving consistency, then you still have work to do. Consistency is the magic, guys. It's not even profitability. Understand this. Profitability is not the clue. Everybody wants to show me their profits. I don't want to see your profits. I want to see your consistency. Do not show me your profits. You can throw a dart and get a profit. You can flip a coin and get a profit. Your profits show me nothing. Do you understand? It just shows me you're lucky. I want to see how you lose. I want to see your losses first. That's the first thing. Show me your losses and I'll show you what kind of human being you are. I'll show you how, I'll show me your losses and I will know what kind of person you are, what kind of man you are, what kind of woman you are. Do you keep your word? Are you true? All right. Are you firm? Do you do what you promise? Do you do what you say? I can see all of that in your losses, not in your wins. I can only see it in your losses. I want to see your losses first. I want to see the consistency of controlling your losses. You show me that consistency, and there's something there, you know? I look at profitability last because it shows me the least. You could be in an environment where a rising tide raises all the boats, the fancy ones and the frickin' crappy ones. You understand? And so that doesn't tell me anything about your ability. But what I know you can't get lucky at is consistently small, controllable losses. You can't luck your way into that. That takes work. That takes discipline. That takes time and it takes effort to get there. That is the proof of work in this game. Consistency with controllable losses. I want to chart your losses, not your gains. All right. Exercise, typing what I say, I like that. Profitability is not the clue. I want to see your consistency. I want to see your losses. And I will know what kind of person you are. Whether you are firm, whether you do what you say. That's right. Your losses tell me everything. Think about this, guys. Social media has given us the ability to have a certain persona, to project a certain persona to the world. Almost no one's persona is who they are on social media. We know this, all right? And so it gives us the ability to shape a persona the way we want to, and to take this shaped persona and present it to the world. This is what social media has given us the ability to do, okay? To be something that's not quite the real us in a certain way. A modified us, a slightly more perfect us, if you will. But think about this. Real you comes out in the dark. You see, the real you comes out when everything you plan doesn't go that way and all the lights get turned off. That's the moment I want to see you. I want to see you in the heat of the moment when what you wanted to happen didn't happen. I want to see, what kind of man are you? What kind of woman are you now? Do you rise to the occasion and do what you're supposed to do? Do you freak out? Do you freeze? Do you stick your head in the sand like a freaking ostrich and hope that it just simply goes away or vanishes in thin air? What do you do when everything goes wrong? That's when I look at you the closest, because that tells me exactly who you are. Not when your trade is winning, not when you're making money. No, when everything you wanted to happen didn't. Now what? And the real you, what you have, the real you, whether you have courage, whether you have discipline, whether you have control, all of these things are revealed in that moment. Are you true? It's not revealed when everything you planned is going your way. So it's the darkness that actually serves as the light. It's your losses that allow me to peer into your soul. And that's not just in trading, that's in life. I've always told you that the market is a microcosmic version of life. And the qualities that make for being a good trader are the same qualities that make for being a good anything, even a good human being. And this is why this activity we call trading, this magnificent obsession of mine, is so special. It is almost spiritual, because you can't become good at trading and not let that goodness spill over into almost every corner of your life. You can't become more disciplined and not have that discipline spill over into every other activity that requires discipline. You can't become more responsible as a trader and not become more responsible as a father, as a man, as a woman, as in everything. It's not like it just stops when you stop trading. So trading fosters greater discipline. Trading fosters greater responsibility. Trading fosters being true, keeping your word, keeping your freaking promises, doing what you say you're going to do. It teaches you to assess risk. It teaches you how to end things. Do you know how difficult it is for human beings to end something, to end a toxic relationship? They'd rather stay in the toxic relationship. Do you know how difficult it is to change a mediocre life? They'd rather keep the mediocre life. But trading teaches you to kill what's mediocre, to stop what's failing, to end that toxic relationship. How can you become a better trader and not become a better anything? This is greater than buying something for $1 and selling it for $2. This is about becoming the most supreme version of yourself, the high quality man or woman that is so lacking in today's world. All right, guys, that's my little monologue. Thank you so much. I love doing this. I love you. Thank you for your support, guys. Please like this video. If you have not subscribed to the channel, hit the subscribe button. Make sure you click the bell, turn all notifications on. I will be back with you live this upcoming Thursday for Tech Thursdays. Don't forget, same time, same channel, guys. Ciao for now. All right. Why are my nails so shiny? It's a good question. Ciao, guys.